I'm Hannah Wallace and welcome to Finextra TV. Kindly calling into our virtual studio today to talk about the importance of liquidity and the impact it's having on the financial ecosystem and wider economy is David Chance, Vice President of Product Strategy and Innovation at Fiserv, and Mario Mendia, Vice President International Markets from TAS Group. So welcome to the both of you. It's good to see you again.
Yeah, same here. Yeah.
Really good to have you both on. So yes, David, this is a big topic. I'd love to start with you. Could you begin by highlighting the importance of liquidity and tell us what's driving this need for effective cash and liquidity management? Let's start there.
Okay, thank you. Yeah, I think, in its simplest form, liquidity really defines how quickly you actually gain access to available funds in an account. But then from a macro view, it's really around the efficient allocation of economic or financial resources while managing the capital around that, and more importantly, the risk of that movement and those obligations. I think we've seen a lot of structural changes in the financial services market over the last 5-10 years, with ever increasing regulations and the need to test the resiliency of the financial services market to ensure stability in the market itself. The failure of a payment will have a significant cost and impact on the individuals, the companies, the financial institutions as well, and potentially the systemic impact on all parties. We've seen that in the past, and that was one of the key drivers around the problems we had during the financial crisis. I think secondly, there's a real move towards instant and faster payments, and that's driven a real focus on real-time liquidity monitoring. There's an increasingly strong regulatory pressure on banks to effectively manage their liquidity risk, but we have still a concept of a banking day that doesn't cover the 24/7 by 365 environment in which those faster instant payments sit. And I think what we tend to do is focus on the regulatory side of it. But I think, a good, strong liquidity management solution gives us a great platform for driving a value proposition, both internally within an FI, but also to help customers, corporations effectively and efficiently manage their cash positions.
That's right. Well, thank you very much for setting the scene for us. It's good to get the backstory as well. So Fiserv, as a leading payments technology provider then, how is Fiserv supporting those financial institutions? Can you tell us a bit more about that?
Yeah, the annual report that we did together earlier this year showed a real importance, a real focus around the availability of predictive cash forecasting and the self-service tools that are needed around that to drive the solutions. And as I said before, financial institutions are now looking beyond the regulators' demands for reporting intraday liquidity positions and the exposure around that to being able to use those various liquidity positions effectively, optimizing it and monetizing the excess liquidity that you have without driving undue risk within the organization itself. Our enterprise payments platform has done a lot of hard work around payment flows, around scheduling, around managing the flow control. And what we wanted to do was augment that payments leadership to show how to use and where liquidity is being used to really provide that in-depth analysis of liquidity positions and usage. And so we've partnered with the TAS Group, a leading provider of liquidity management solutions. And together through the Aquarius cash management and forecasting solutions, we're combining the best in class of the payments side and the liquidity management side. And my friend Mario can obviously describe the product better than I can.
He can indeed. Thank you very much for that, David. It certainly sounds like you've been very busy at Fiserv, and interesting to hear a bit more about the partnership. So Mario, yes, coming to you, can you tell us what are the key features then of Aquarius, and how does it address financial institutions' liquidity challenges? What about that?
Well, with Aquarius, financial institution will benefit from a single integration point, faster time to market, and a strong value proposition. Whether they are central, large, regional, or smaller banks, Aquarius helps them in digitalizing their liquidity management in order to improve funding, secure compliance, and optimize liquidity buffers. The systems allows total real-time visibility across multi-currency payments and liquid assets like collaterals and securities. It overcomes the bank's system fragmentation with its modular approach. The system supports treasury operation and liquidity monitoring and business intelligence all on the same database, which improves a lot data governance and helps reducing manual intervention, which are reduced also by automated tasks for payment throttling, automated sweeping, or reconciliation. In addition, it brings integrated BCBS 248 stress testing to avoid data preparation efforts and mistakes, and make intraday liquidity stress testing less stressing, basically. Together, I think Fiserv and TAS provided the richer value proposition of payments and liquidity management capabilities.
All right, so you've touched on some of the challenges there as well. So let's come to the benefits then. Could you sum up the benefits that are being reaped by the financial institutions, but also the corporate customers? What about that?
Sure. The conversation has moved from just regulatory to business optimization. Accurate, timely, and proactive management of liquidity position can give a financial institution a real competitive advantage. And financial institution can provide real-time business insight into their customer payments, show how these payments affect their funding requirements, and how changes in their behavior can have a positive impact on their cash flow, improving forecasting and liquidity management. The approach to the intraday liquidity has changed according to banks' maturity. After an initial stage when liquidity recognition and compliance reporting is the main focus, banks tend to consolidate liquidity across their organization and then improve their intraday usage to finally help company economic performance with intraday buffer reduction or intraday credit services. What is needed is an approach that understands the context in which the data was originated, the business rationale behind it, and the relationship between the various systems that impact on the individual and consolidated liquidity position. That's where Fiserv and TAS can really help you.
Mm-hmm. A really successful partnership. And taking all of that into account then, David, coming back to you, as we draw closer to 2022, I'm eager to hear what we can expect from this space.
Yeah, an interesting question. And I think we'll see two real drivers as we move into 2022. One is the sort of movement of instant payments into that cross-border space. You know, one of the key requirements of that is not just the exchange of messages, but is the management and availability of liquidity to support the settlement across those two geographies, whether that's through market infrastructures, whether that's using stable coins or CBDCs. It's all a liquidity problem, and I think that's what we'll see a focus on. I think the second thing is that we'll focus more in a financial institution space on the business problems. You know, we've talked a long time around overlay services, business services. You know, as Mario said, we're focusing on the liquidity side as one of those services that a financial institution can drive value through to their clients, their customers. So I think those are the two big things that I see happening in 2022. You know, just continuing the excitement we've had over the last year as we've seen such strides in the modernization of payments around the world. I think this is, you know, really filling that final step in terms of the exchange of messages and now actually managing the liquidity to drive risk out of the settlement area.
That's right. Watch this space. David, thank you very much for your predictions. Looking forward to reflecting on those further down the line. But for now, Mario, David, thank you very much for calling in. It's been a pleasure.
Thank you very much.
Thank you.
Same here.